everyone, we have prepared latest market updates for November 4th, 2022. Twitter cuts staff and infrastructure costs. Twitter Inc. will tell employees by email Friday whether they have been laid off, temporarily close its offices, and bar staff access after a week of uncertainty about the company's future under new owner Elon Musk. Musk, the world's richest man, is set to cut about 3,700 Twitter employees, or about half the staff, as he seeks to cut costs and impose a new work ethic according to internal plans. As a result, a class action lawsuit was filed Thursday against Twitter from its employees who allege the company in conducting mass layoffs without the required 60 days notice, a violation of federal and California law. Meanwhile, Elon Musk has instructed the Twitter Inc. team to find up to $1 billion a year to save on infrastructure costs, according to two sources familiar with the matter, and an internal report at Slack. This has raised concerns that Twitter could go offline during high-traffic events, such as the U.S. midterm elections. Coinbase reports losses amid fall in trade. U.S. cryptocurrency exchange Coinbase Global Inc. on Thursday reported a third-quarter loss as high inflation, rising interest rates, and geopolitical tensions dampened demand for risky assets, reducing trading volumes in digital currencies such as Bitcoin. For the 3 months ended September 30th, Coinbase posted a net loss of $544.6 million, or $2.43 per diluted share, compared with a profit of $406.1 million, or $1.62 per diluted share, a year earlier. Earnings from operations declined 64% from the prior year to $365.9 million. Earnings were significantly impacted by stronger macroeconomic factors and the unfavorable impact on the cryptocurrency market, as well as a shift in trading volume to offshore areas, the company said in a letter to shareholders. Coinbase cited poor macroeconomic conditions as the reasons for the decline, with the average daily capitalization of the cryptocurrency market dropping 30% and trading volumes shifting outside the U.S. due to a lack of clarity in the regulatory environment. The company also blamed a growing number of retail clients for the decline in trading volumes. Oil rises as dollar falls and supply risks persist. Oil rose on Friday thanks to a weaker dollar and lingering supply risks, although recession fears and the outbreak of COVID in China kept prices in check. Brent crude futures rose 1.9% to $96.51 a barrel. West Texas Intermediate WTI crude futures rose 2.2% to $90.11 a barrel. Both contracts rose as the dollar weakened. A weaker dollar boosts demand for oil as it makes the commodity cheaper for holders of other currencies. While demand problems are putting pressure on the market, supply is still expected to be tight given Europe's impending embargo on Russian oil and a decline in U.S. crude stocks. OPEC Plus cuts have provided some stability in the market in the short term, but that could change when the EU ban on Russian crude comes into effect next month and on refined products on February. In other news, fears of a recession in the U.S., the world's biggest oil consumer, intensified Thursday after Federal Reserve Chairman Jerome Powell said it was very premature to think about suspending interest rate hikes.